Hello and welcome to the day ahead. It is Friday, the 22nd of July. I'm Andrew Gagan. Let's get straight to the overseas markets. European share markets mixed after the ECB raised interest rates for the first time in more than a decade, while the Italian Prime Minister has quit. Well, Wall Street closed higher as Tesla shares soared on news of higher than expected earnings, offsetting in the energy and telecom sectors. Markets continue to await anxiously for the US Fed Reserve meeting next week, where policymakers are expected to raise interest rates to curb runaway inflation. All three major indices higher, despite energy stocks feeling the pressure of weak crude oil prices. Stocks specifically, AT&T tumbled, sending telecom shares down after the wireless carrier cut its cash flow forecast, saying some subscribers were delaying paying bills. Elsewhere, Snapchat has posted its weakest ever quarterly sales, sending shares plummeting by 25% at one point. The social media company reporting its second quarter revenue came in at $1.1 billion, narrowly missing Wall Street expectations. Meanwhile, shares of American Airlines, Delta and United fell even after the carriers posted first quarterly profit without US government aid. That's since the COVID pandemic began. Airlines expect travel demand to hold up even in the second half of the year, given there's yet little evidence higher fares, persistently high inflation and rising interest rates are curbing consumer spending. Well, the European Central Bank has raised interest rates for the first time in 11 years, breaking its own guidance of a 25 basis point move by delivering a 50 basis point hike. Europe's economy is struggling under the weight of higher food and energy costs and wage rises, while contending with the war in Ukraine. The ECB also lifted its main refinancing rate 0.5%, ending 8 years of negative rates, and has promised another hike, possibly as soon as September. ECB President Christine Lagarde said price pressure is spreading across more and more sectors, saying we expect inflation to remain undesirably high for some time. The bank has also instituted a new bond purchase scheme to help big debtor nations such as Italy. This as Italian bonds were sold off sharply on the resignation of Prime Minister Mario Draghi. In US data, Americans enrolling for unemployment benefits rose for a third straight week last week to just over 250,000, the highest in 8 months. And in a further sign the US economy is slowing as interest rates rise, factory activity has slumped, the Philadelphia Fed Manufacturing Index falling from negative 3.3 to negative 12.3 in July. US Treasury yields eased overnight as investors focused on the slowdown in Europe. The US 10-year falling 16 points to 2.88%, and the 2 is down to 3.09%. Major currencies were mostly weaker against the US dollar, the Aussie sitting at around 69.1 US cents. Well, investors can expect a relatively flat opening on the local share market. ASX futures currently around 0.2% higher. Fears over demand for oil in the wake of the ECB's aim of slowing the economy prompted the oil price to tumble. Brent crude down 3%. This as Libya lifts production, Russia's gas flows to Europe resume, and data reveals US gasoline stockpiles are higher. The iron ore futures price fell at 103 a tonne, and base metal prices were mostly lower on global demand concerns, although nickel rose by 1.4%. The gold futures price rising to $1,713 an ounce. And Bitcoin is trading at around 23,000 US dollars. That is your day ahead. We'll see you again on Monday.